Let's just talk about this. Don't confuse the vector candles or the 3 swipes at the stop loss, right? The dealer vectors. Don't confuse that with the 3 levels of rise or 3 levels of fall. It's 2 totally different things. I think the DMR guys call them pushes. Call them whatever you want. Understand that when the dealer hits the stops, he does it in 3 small bursts. Okay, and that's what you have to remember. You're looking for the 3 bursts. We're going to talk about stop hunt high, the M will form, stop hunt low, W will form. All right, I was driving yesterday, was it yesterday or day before yesterday? I don't know, I lose track of time. And there's a song by 50 Cent. I know the music stuff. It's called Candy Shop. You guys may or may not have heard of it. You can look it up. I was trying to find it and edit it in time for you guys, but I had too much going on this week. Had a lot of emails to read. Okay, you love the song, Greg. Okay. All right. This is what came to my mind when I was driving down the road listening to the song. It says something like, welcome to the candy shop, something, something, something. Okay, well, it says, welcome to the candy shop. Don't trade until they hit the stops. That's what came to my head, man. So now you have when I move, you move, and now you have the candy shop. Welcome to the candy shop. Don't trade until they hit the stops. Okay, think. Why am I saying that? Why did that come to my head? When the dealer hits the stops, that's when the signal starts to set up. Okay, that's when he has hit or broken the psychological support or resistance level. So think about it now. When's the best time to trade? When the dealer hits the stops. That's what I've been telling you since the beginning, but it's just a different way to articulate it. Welcome to the candy shop. When the dealer hits the stops, you're going to get paid. You're going to pick up your candy. I'm not going to quit my day job. I know I'm not a good singer. All right, variation on the theme. Welcome to the trading shop. Don't trade until they hit the stops. Okay, that's our song, man. I guess when I'm done making up all these songs, I'll go into the studio and make like a cut of all the songs and sing over them. It'd be hilarious. All right. So look, think about what I'm saying, though. You take a trade because you think you see an M or W and nothing's really happened in the market. You take a trade inside the blue box, and then it doesn't work out. The dealer comes back and hits the stops, and you're like, why didn't that trade work out, Steve? It was a formation inside. It was an M. It was a perfect M. It happened in GJ this week. In fact, I got several emails on it, and I meant to shoot it and put it in there. I'll do it for next week. Let me make a note right now. GJ trade for next week. All right, but here's the point. GJ formed a perfect M formation inside the blue box. How many times do I have to tell you not to take shit that's inside the range of the blue box? Let today be the last time that I tell you this. Because here's what happened. The dealer made an M formation in the blue box, and then he hit the stops to the high side and made the perfect M formation and corrected 100 plus pips. Several emails said, I took this M and got stopped out, and I cursed you out the rest of the day. They didn't say that, but that's what they insinuated. Why didn't you attack back? If the dealer takes your money away from you and issues a perfect M formation at the next level, you hit him again. You don't go on vacation. Control the losses to a reasonable amount. Do not let your equity bleed out 25, 30, 40 pip stop loss levels. That is not what I teach you. I teach you second leg, 7 to 10 pips. Okay, the 19th the trade was. Thanks, Joe. Look, if your entry is here, your stop loss is right there, 10, 15 pips. Think for a minute. If the dealer comes back and extends this level, you need to be out of the market. Control the loss to a 10 or 15, 18 pip stop loss. You are now standing aside minus 18. Big deal. Don't stand aside minus 180. It's going to take you a week to make that back. If you take minus 18, you're out, and then the dealer does this again, you got them. Make your 18 plus back. Go for your 50, you'll be net positive 32 for the day. Control the losses and hit him again. The dealer hits the level again. Why wouldn't you hit him again? Don't be afraid of them. They're not that magical. They're not that mystical. It's not Oz. I'm pulling the curtain back. Hit the stops high, drop. Hit the stops low, rise. Trade in the range. That's all they got. So what happened in GJ was this. It did this. Inside the box, inside the blue range. Everyone took this trade that sent me an email here, got all excited. It went up about 20 pips, and then the dealer went, just kidding, and he did this. You got stopped out here for minus whatever your minus was, none of my business, but it should be less than 20. A tight stop, second leg. You should have got in right here, and then this is exactly what happened. It's kind of funny that this chart is a year and a half old. Maybe a year old. This is the same shit. That's what I'm trying to tell you. You keep writing to me and saying, Steve, is it really this simple? Is it that easy? And the answer is yes, it is that easy. This is all they got. They'll show you a pattern, exploit the level, psychological support and resistance. What's the psychological support and resistance? Intraday. The Asian accumulation range. If the dealer doesn't break above the Asian accumulation range, you don't trade. Welcome to the candy shop. Don't trade until he hits the friggin' stops. He just hit him over here. Now you can trade. It's safe to trade. Don't send me another friggin' trade right now. Mark it down on your calendar. It's 8:09 Eastern Time on 3/25. Don't send me another friggin' loser that you took inside the blue box asking me why the hell it didn't work out. I'm putting it on you now. I'm calling you out right now. Do not take a trade that is within the Asian range. The Asian range is the accumulation phase. Will trades often work out in that range? Yes, but the probability is not in your favor. The probability becomes in your favor when the dealer hits the stops high or low and issues the formation that's right in front of your eyes right now. Flashcard. Okay? This is another example of what a flashcard should look like for you. Here, what do? Where's the entry? Somewhere in here, right? Right before they shift the zone. Any one of these bars. So what do? Take your paint, block all this crap out. Start asking the questions. What's the Asian range? 27 pips. The dealer vectors to the high. He pulls back, hits the stops of the long holders, comes back to the level, fails to break it. Outside structure to the high. The dealer trades off of that high in consolidation / accumulation. The dealer is accumulating contracts for the anticipated continuation long. All right, is my sound okay? It's not me, right? It's you guys. Okay. The dealer makes the M formation. You enter on the failure to break the high of the day somewhere in here. This is your point of control, your point of entry, your point of contact. You take over before he shifts the zone. And when you learn to grab these on the second leg close, you're going to be in profit in 15 to 45 minutes. Guaranteed. Right? Absolutely correct. Until the second leg fails to break the high, you are guessing. Understand? You're guessing until the dealer locks the high or locks the low for the day after the stop hunt. You build confidence by taking flashcards of these activities that you know pay out, and you match them up to your chart. Okay. Ideally, your flashcard should look exactly like this. This should be a flashcard. Go find this. I don't even know what it is. It's probably Euro. Go find this chart. This should be a flashcard. Why? The dealer vectors 25 to 50 pips above the agent psychological resistance level. He pulls back and forms the second leg at the session open inside the shadow. He then holds the level for 30 minutes before he shifts away, 45 minutes. He spikes back here, pulls away, holds it 15 more minutes, and then lights out, shifts the zone away. Hit the stops, shift it away again, run it down. Yes, Whitney, these are textbook. If there was a textbook, this should be in the top 5. This should be one of your signatures. Why? Stop hunt zone, it hit the stop hunt shadow, in the brinks, the timing. Think of all the elements that are right, okay? If we turn this into a flashcard right now, let's look at it. If we turn this into a flashcard, we'd block all the crap out from here, okay? I can't do paint inside of the slideshow. It'll mess up my slides, so I'm just drawing, okay? All this other crap is gone. TDI is not here. That's fine, but what I want you to see is this. 27 pip range. It actually is less than 27 pips. Here's why. High to low is 27 pips, correct? The dealer, mid-Asia, snatches the low away from traders that were in this range right here. He shifts it higher, right? Then he holds the level. So this is, in essence, your consolidation zone. What's 27 divided by 2? 28 is 14, so 13 and a half, right? So in essence, you have a 13.5 trading range. No, Joe, there are 2 boxes. I'll talk about it. Okay, look. Your Asian range is technically 13 pips. The dealer extends the high above the blue tracer. These are flashcard reasons. Look, extends the high above the blue tracer, induces traders to take long positions. He pulls back and warrants the Fibonacci continuation. He validates those Fibonacci levels but fails to break the high. And when all the traders turn long, the dealer is net short. He must correct against those intentions and trade and break back below the Asian range to jam the traders that have taken positions. Okay? Now, stop hunt zone, gray box. Timing shadow box or the Brinks box. If the trade sets up second leg or first leg in the shadow, when the first leg forms the high of the day, that's the perfect entry. If you hold your chart up to, you hold your flashcard up to your screen and you see everything from this green hammer right here, hold on. You see everything from this green candle on showing right there. Okay, the dealer breaks, the high is formed, he touched the stop hunt zone box, it's in the shadow, the Brinks shadow. Everything else agrees. TDI is overextended and forms an M or some type of divergence. That's what TDI will be doing. It'll be outside the volatility band. You'll have blood in the water on the secondary line. I can't show you TDI because it's not here. Okay, so if you see this and all these criteria are met, take the trade without hesitation. You should hold your flashcard up to the screen. Remember that stupid picture of me? You should hold the flashcard up to the screen and you should go, man, that looks exactly like this flashcard that I took pictures of and blacked out, and it happens to match all the criteria that Steve laid out for me. That's a trade. What do you have? You have the pattern, you have the timing element, you have the vectors, you have 25 to 50 pips higher than the Asian range. You have the averages open as making an M formation with the mustard. Right? There's your M formation in your mustard. Right there. So, where are we in the world? Do not take any more garbage trades inside the range of the blue box. Are you going to miss some good setups? Absolutely. You'll see them in hindsight. You're going to say, oh, that was a good M, I'll take it. Are you going to stay away from those for the rest of your life? No. But if you're struggling, it's because you're taking everything that resembles an M or a W without any criteria, and then you're pissed off at me that it's not paying out. I'm laying out the criteria right now. That's why I'm here for you guys. We're doing it together. The criteria is this. Unless you have a deeper understanding, of course. The criteria is this. 25 to 50 pips above and below the blue box. M formation second leg. W formation second leg. TDI confirms blood in the water, shark fin outside the band and back in. That's the criteria. It's simple. Okay? So here, to sum it up for the week. Look at the 4-hour chart. Block off the first 8 hours, draw a line all the way across your chart. Those are your psychological support and resistance levels. Go look at these charts. It's the homework this week. Look at them. The dealer has to exploit. He has to exploit the Asian range of the week. He has to. Because positions are built upon that spread. Okay, it's like I drew the chart for you. What's going on here? Dealer opens high to snag the traders. Traders think long. He corrects. Why? If traders are thinking long and everything signals long, technically, the dealer has to correct against that move because he's running out of cash. Okay? Mark the 4-hour chart. Draw the psychological support and resistance. Okay, next week's homework is going to be, if you want to start messing with it now, since it is Sunday, is to draw. No, I'm not going to tell you. Never mind. Because here's why. We got 2 more nights, and we got the rest of the night tonight to teach, and we got a whole nother night lined up for you tomorrow. And everyone, as same as me, has put their heart and soul into teaching and making slides, and I don't want you guys drawing lines on your chart and taking trades and then not paying attention. So I'll save that assignment for next week. Let me make a note of what I want you to do. Okay, big board. Okay, I don't want to say too much mumbling over here. All right, we got 10 minutes. Let's do some questions. Let me sum up where we're at. I want you to start looking at the 4-hour chart or the 1-hour chart, whatever makes you happy. But I want you to do the assignment in the 4-hour chart. The 4 majors, any time range. I want you to start to understand the psychological support and resistance levels that the dealer creates in the first 8 hours of the week. Okay? Mark the chart. Try to identify the high of the week and the low of the week and trade away from those areas. Drill down to a 15-minute chart. Remember mini view. And start to identify the pattern within the pattern. Every one of these patterns is going to have a sub-pattern. Here's what's going to happen. The dealer's going to railroad track to the high on Sunday or Monday. And within that pattern, on a 15-minute chart, you will see an M or a W formation. That formation will coincide with the high of the week, will be the high of the day. You understand? It's all connected. The high of the week will form as some type of high of the day on the higher time frame or on the lower time frame, the 15-minute. So looking at the 4-hour and the 15-minute, you're going to have the 4-hour. Let's pretend that this is the high of the week right here. Okay, so let's say this is the high of the week at the same time the high of the day is forming. Do you understand? The HOW and the HOD are coordinated by the dealer on purpose. It's not the weather. Got to get my dig back in there. All right? The high of the week and the high of the day are going to form at the same time on the chart. The only difference is that 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. All this will be one 4-hour candle straight up. Like that. That's how it's going to look on the 4-hour chart. Surely it'll paint better than I can draw. And it's going to look like that. Then what you'll have is, you'll see it start to fall off. But on the high of the week, the one 4-hour bar will be a railroad track type. Okay? 4-hour bar. On the 15-minute chart, it'll make the M formation, which is coordinated together. So now you got the high of the week is set. Now you trade away from the high of the week for 2.5 to 3 days until the dealer issues another signal. Alex, I'm not telling you to enter on the 4-hour. I'm telling you to start to understand the bigger picture and use the 15-minute for entries. Okay, how do you use paint to do the candles? Go back to the recording. It'll be up tonight. I showed you exactly how to do it. Slow it down, watch it several times. Outside structure is when the dealer creates a spike vector to the high and then trades off that level in here with these candles. Outside structure high, outside structure low. Let me see if I got I'll pull a flashcard up before I leave that. Okay, let's see what else. Okay, what's the best time to be at the station? Trading hours. Okay, from 1 to 5 a.m. New York, 1 to 4 a.m. New York, 4 or 5 hours. Take a break from 8 to 11 New York time. Nothing's changed, man. You're looking for the dealer to exploit the shadow at the start of the London and the start of the U.S. When you see an M on the 4-hour chart, is it too late to trade? No, Alex. If you see an M on the 4-hour, that's your anchor point. If you got an M on the 4-hour chart, that's your peak formation high. Then you're looking for stop hunt high drop, stop hunt high drop, W, get out. Right? Tom, I will. I'm gonna do the TDI next week. Listen, if you're confused about some things, don't forget I left a class up. Tonight we'll post the next day. It might already be up. When Zen comes on, I'll talk to him. Listen, I told you have day 1 and 2. Every Sunday I'm going to add to my class roster until all 4 days are up in the forum. These recordings will be left up. You guys can look at them over and over again so you get it. Do me a favor. We're going to go with Thursday night as the homework again, but don't mail it to me. I don't need it. Post it in the forum. Okay, I'm going to try to answer all the questions in here and go through it. Listen, somebody sent me an email and actually sent it to Zen too, and I was a little offended. They put like, Steve really looks at this stuff. Yeah, Steve really does look at this stuff. I want to help you guys. I wouldn't have committed my Sundays to spending time with you, and I wouldn't dump 10, 15 hours of slides and production all week because I hate you. You guys are my extended family. I want the best for you. I love the business. I'm passionate about it. If that doesn't show, I can't help you. That's what I mean about the negativity and the things that are into your head. You really think that I'm sitting here pulling this out 20 minutes before Sunday? I spend all week reading the emails. I've answered 90% of them. A lot of you got answers. If you didn't, you'll have an answer this week. I'm going through every single one of them. I want to know what's going on with you guys. I need to take a temperature of the group. That's why I asked you to email me. That's why I didn't use SurveyMonkey, because I'm reading all of them. That's why I bought monitors, because most of you have equipment issues. Okay? And I'm not mad. I'm just saying, come on, man. I'm pouring my heart out to you guys out here. I know there should be an asshole clause in the student agreement. I don't have that. Maybe I should write that in. I know that you see me here 2 hours, but I promise you it takes hours and hours I got to write the rough draft. I got to rehearse it, make sure it's enough time, get my words. Heidi's got to convert my notes into a slideshow. Don't forget, I got a newborn baby, 2.5 weeks old, man. I'm doing everything I can. I want you guys to get it, and I appreciate all the nice emails, but the negativity is got to stop. It's retarded. It's crippling you. Just open your mind like I asked you and give me a good solid 2 hours and put all the negativity out of your mind and don't say negative things. Just Be positive. That's all I want from you guys. I want you to be positive for 2 hours a week. Okay. It is. Any more questions? Thanks for all the positive stuff you guys are writing right now. I really appreciate it. I think you guys write some emails, not you guys, but sometimes you forget I'm a person. I have feelings, man. You say shit, and you know what? That stuff cuts, man. I'm human. I want to keep the negativity out of the business. I want you to understand. The comfort is in our group. I've said it 100 times. You cannot go and tell somebody that you can pick the high and low and the reversal point in the business. They will tell you that you are berserk, crazy, you need to be in a straitjacket. I've heard it all my trading career. And let me say this. The joke is on them. You can pick the tops and bottoms in any market condition when you understand the dealer's behavior, and that's what we're working on together as a group. No, I just want to thank everybody for being here. I will be back next Sunday, and we'll continue going forward. We're getting through the class at a very slow pace. You're doing the homework. Things should start to be gelling in your mind, coming together, okay? So you're looking at right now, we're looking at the broad spectrum. We're looking at the 4-hour chart on the bigger picture, understanding the psychological support and resistance levels. We're going to work on the trading zone. We're going to start talking about the 22, 333 trades, multi-session M&Ws. Okay?